Hey, welcome back to Everyday Economics. This is the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of America's Talking Network, and you can hear all of our terrific podcasts at americastalking.com. To support Everyday Economics, please make a tax-deductible charitable contribution by clicking the link in the show description. We're recording this episode on Friday, December 13th. And joining me as always, my friend and colleague, Dr. Orphe Divounguy, PhD economist and all-around good guy. Dr. O, let's talk about the week ahead. But why don't we start with what happened, in this current week? This show is going to air on is going to air on Monday. Your column in the Center Square comes out on Monday. So we got a few things to talk about. So go ahead, open it up.
We had a CPI, PPI reports, both came in, really interesting actually. So the CPI report was in line with expectations, but on the hot side, as we forecasted.
Right. So consumer prices.
Yeah. Consumer prices coming up a little bit. A little bit hot. And we knew it was coming. So it wasn't unexpected. We knew this was coming, right? So not too unexpected, but still on the hot side, right?
Okay.
Some people started blaming, housing inflation, and I was quick to shut that down on the social media.
So if not housing, then what? What did
energy.
You see?
It's energy. Right. We had months and months of declining energy prices. Not disinflation. Declining,
right.
Meaning falling energy prices.
Right.
Not cooling. And all of a sudden we got an uptick in energy prices.
So
and food prices.
Just quick pump watching on my part, right? Okay, so we had gasoline in and around where I live in suburban Chicago down to about $2.89 a gallon out again in the suburbs. This morning, I drove my daughter to school and I didn't need gas, but I was seeing a lot of 329s, a lot of 339s. I was out in Seattle last week. You and I got to very briefly visit. I saw gasoline prices out there that were still staggeringly high. And when I filled up my rental car at a gas station near SeaTac, I'm certainly not getting any bargains over there. But I paid $5 a gallon for regular gasoline.
That's right.
So so what's going on inside of energy at this point? That's driving it.
It's interesting. I think energy demand is expected to continue to cool as global economic growth eases, but we might have some supply issues. Remember we're still in the middle of a bunch of wars.
Yes.
And then we also have trade wars on the horizon.
Yes.
So yeah,
there was some buzz up in Canada this week. I mean, reaction to President-elect Trump's tariff threats, and Ford, the head of Ontario, said that he's not all that enthusiastic about it. But I believe all the other provincial leaders said that they we need the United States. We're not gonna fiddle around with pricing or supply. What do we make? What do we make of this?
So on one hand, you have housing inflation actually coming down as predicted. I don't know, we've been predicting for almost 2 years now. Housing inflation easing pretty rapidly now, and potentially going to be a drag on core inflation. Energy price, some of it is seasonal too, right? So food prices this time of year, energy prices will travel too. But again, I think less about demand, probably more supply driven and temporary is my take on that. So I think the Fed will likely proceed, going into next week, the Fed will likely proceed with another 25 basis rate cut. basis points rate cut. But
well, let's talk about that specifically.
Yeah.
I mean, so we're expecting a Fed decision.
That's right.
And
they're going to look at the labor market. We had the employment report last week.
Right.
Employment growth strong, but
right.
we could argue, catching up.
Yes, making up for the October number was awful, and that was largely
wage growth easing. So going in the right direction. You don't have a labor market that is that could be perceived as somewhat inflationary. You don't have a labor market that could with wage growth that could potentially lead to higher price inflation. And so you're not worried about the labor market as much. If anything, if a Fed was worried about a labor market cooling too much, the labor market looks pretty steady, on a pretty good path right now. So that's the good news. So, you proceed as you would have, before the jobs report, which is basically a rate cut in December. And then, you get this CPI, PPI report. The CPI report comes in a little hot. In light of expectations, a little hot, but because it was mostly headline inflation due to food and energy prices, which are really volatile, right? It could just be 1 month. So erring on the side of caution, you cut anyway, because you have a cooling economy, right? Hopefully not cooling too fast, but, with inflation expectations, pretty well anchored, with inflation, steady, coming down slowly, especially on the core side, you're thinking, okay, why not cut again, right? The Fed funds rate is just so high relative to where inflation is still, right? That you continue to proceed with this policy rate normalization. Retail sales are coming up, and I think retail sales are going to be telling. And this is happening like during the FOMC meeting on Tuesday and Wednesday. Yeah. Right. So like, it's probably not going to figure into the decision. But markets are going to react to the retail sales numbers, for sure. Another thing is, I got to say, look, I think Powell is going to be thinking, hey, we proceed as we had decided, or at least, let me just fix this a little bit. Look, they did not. Powell will always tell you that they haven't made up their minds until they see the data, right, data dependent, et cetera. But we know he was leaning somewhat dovish, and so I think Powell will be making the push for another 25 basis point rate cut. But there will be some people in the committee that will be resistant to that idea. Right? Yeah, this will not be a unanimous vote. This will likely be a split vote where, the majority will lean towards another rate cut, followed by a big pause, which really makes me think. And I wrote about this in the Center Square column. Could this December rate cut be the last one, right? And we may get a big pause at the start of the year. Remember, every year we have these seasonality issues at the start of the year, and which means basically the data will likely be very noisy in January. So we're going to probably not look at the January data will come out in February. So we're not going to look at the January report, which is the end of the December numbers. We're not going to really pay attention to the January numbers, which will come out in February. All right. We're going to look at these numbers and say, hey, there's probably a lot of noise in here. Right. And so we're going to have to wait till March to get any sense of like what's really happening. Right. So there will be a pause. The Fed will pause in Q1 and not do anything. Just kind of wait and see what happens. So that's kind of where we're at.
Well, I appreciate that.
Markets are taking that into account heading into this holiday season.
I think you're right about that. We'll call it to an end there. Plenty more discussion from you and me today. The first of 3 shows that we're going to tape. Appreciate your thoughts as always. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other high quality podcasts at americastalking.com.